Hello there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka along with me, Shriyansi. Shriyansi, I think again we have to say that yet another day of record high. Nifty closed above 26,100.
Absolutely, yeah.
Sensex was up nearly 700 points at the highest point of the day. In fact, all the index were contributing majorly. Auto stocks were in top gear. In fact, Nifty Auto Index, that's trading at an all-time high. With stocks like Maruti, M&M, they were the lead contributor. This is on the back of the Karnataka possible EV policy coming in. There were reports that Karnataka state government is considering to exempt the electric as well as the hybrid cars under 25 lakh to exempt them from the road tax. And that's what took these stocks to a high level, where the top gainers were Maruti and M&M stocks like. Another set of stocks coming in from, of course, IT stocks were up. All eyes would be on the Accenture earnings, which are due to be reported today. Then metal index was again at this whole week, in fact starting last week itself, ever since the China measures came, the Central Bank of China came up with the measures to support the economy. We've seen metal index has been trading on the higher levels, and metal index was again 1.5% up today. Vedanta stocks like Vedanta, many of the aluminium counters, Vedanta majorly on the back of the upcoming dividend news. That's what took the stock to higher levels. But then a couple of stocks which were trading on different news flows also. PB Fintech, that stock fell for 8%. Yesterday also, it fell nearly 6% today. So in 2 days, the stock has lost nearly 14%. Though there's positive news of the company is planning to enter into the healthcare sector also. In fact, a bullish note, a positive note also came in on the stock from Bernstein also, that it could be if PP Fintech is able to turn it around, then it could be possibly a dominant player in the entire insurance distribution space. But then Street sees it as a concerning factor. Consumer durables index was lower by 1% today. Pharma stocks were lower today. Of course, there was a news the Apex drug regulator has come up, has seen some observation also, and they find certain medicines also where there are issues on the quality and the standard issue were concerned. So that took the pharma stocks a little jittery and nervous today. But then a couple of other stocks like Trend, City bullish note, Shriyansi, and also the Nifty possible inclusion. That was one stellar stock for the day today.
Well, absolutely, yeah. Trent was buzzing away in trade. When you take a look at the chart as well, you're looking at gains coming in of about 3% on Trent. And of course, there's a couple of counters that are set to be replaced in the benchmark Nifty 50 index. The likes of Trent as well as Bharat Electronics set to replace Divi's Laboratories and LTI Mindtree. Like Priyanka just pointed out, Citi of course came out with a note on Trent, initiated a buy rating with a target price of 9,250 rupees, and that is the one to watch out for. Now, they were talking about how the company is outpacing its peers, driving street upgrades as well, so quite bullish on Trent there. And they're also calling it a turning around star, so that's the roundup that we had coming in from Citi as well. Now, the government, of course, is considering allowing more PSU NBFCs to issue capital gains bonds under Section 54 EC of the Income Tax Act. And that is the one important update to watch out for. Of course, we'll be getting you more details on this. But sources tell your channel that the renewable sector's financing needs could push the MNRE to seek approvals from the Finance Ministry to include green-focused companies, NBFCs, the likes of IREDA as well. And that is the one news update that we were watching very closely. But let's also take this conversation forward, take a look at the kind of market action then that we saw and make sense of it with Kunal Bothra then. Kunal?
So I think it's been a fantastic expiry. I think we started off, on the back of the overhang in the August series or the start of the August series, where the markets had corrected very sharply. From there, we've scaled up quite well. We've managed to cross, landmark resistances for the index, 24,000, 25,000, and we've also scaled past about the 26,000 mark in this series, and especially in the last few days. I think what we classify this kind of a move for the index is the sector participation. I think that's been one of the best churns which we've seen across the market phases over the last many months. We are not dependent on just one or two sectors which tend to lead up, which had tend to lead up the previous move for the indices. Right now, it's the large cap show which is at play. Banks, autos, financials, metals, real estate stocks. I think these stocks have made a very strong comeback, and it just looks like that the markets is, the market breadth is getting a lot more better, especially on the larger cap front. So I would probably believe that this move is here to sustain till the time these large cap stocks show signs of resilience as well as sturdiness.
Okay, so Kunal, you mentioned about the large caps leading from the front, and of course, the entire overall breadth is also very positive from here. But the banks and financials haven't performed much as yet. We're still waiting for them to. Though it was up in 2 days, nearly the index is up at 450 points. But then, is that the next leg of move can come from banks, or the action lies majorly in other sectors like auto, energy, and metals?
So I think it's going to be a mix of many sectors combined, because in the previous legs, for example, just as an example, in the last 3 months prior to the start of this banking rally is where we saw the FMCG, IT and pharma index. These three were the top performing sectors for 3 or 4 consecutive months going into the month of June, July and August for the markets. And I think that's where the bank nifty and many of the other sectors, they got into a sharpish kind of a correction. Some of them got into a major time-wise consolidation. But now it seems like that there could be a turn where banking stocks, the metal stocks, as well as real estate names, these three sectors could make a very strong comeback. There could be a potential comeback into the PSU names, but I would probably believe that maybe another few weeks of consolidation for the PSU stocks, and they could be ready for the next series where you might see these stocks also getting into a short covering mode. So as of now, I would believe banks, metals as well as real estate could be the top 3 names.
Okay, so that means sectoral churn is completely, that's visible on the screen also. What will be the 2 trades that you would recommend to our viewers today?
So I would recommend a buy on ICICI Bank at current levels, expecting the stock to move towards the next strong psychological mark of 1400 as a target. Stop loss could be kept at 1300 for ICICI Bank. And the second would be a buy on PVR Inox. That stock has done exceptionally well from 1700 to now 1740 approximately on intraday move. So buy with a target of 1800, stop loss at 1685.
All right, thanks Kunal for taking time out and joining us and telling us your view coming in on PSU banks and lots more. But moving on then, Manish Sonthalia, Director and Chief Investment Officer, MK Investment Managers, does not see valuation comfort when it comes to the FMCG sector. He advises to be selective within the consumption discretionary space as well. Listen to what else he had to say then.
Overall, again, there's not too much of valuation comfort as far as the FMCG names are concerned. Vis-a-vis the growth that these companies are offering, I think I'll be remaining selective on consumer discretionary names. Urban consumer is doing better than the rural consumer as far as the discretionary names are concerned. But I think if there is a good monsoon, you'll also look at discretionary names in the rural sector start to do well. So overall consumption is a good place to be in, but one has to be very selective. It can't be a general, one size fits all sort of an approach as far as the consumer name is concerned.
Okay, so consumption looks to be a good theme to Manish Sonthalia. Moving on, couple of counters set to be replaced in the benchmark Nifty 50 index with the likes of Trent and Bharat Electronics, which is set to replace Divi's Lab and LTIMindtree. Let's go across to Somit to understand the kind of inflows and outflows expected across Nifty 50, Next 50 and in fact Bank Nifty. Somit, take it away.
Well, the NSE index changes will be implemented from September 30th, that is Monday, but major inflows regarding this is expected to happen on September 27th. Now, a couple of stocks that are getting that are the new entry in the Nifty 50 index, that is Trent and BL, and both these stocks will see an inflow of anywhere between 340 to 470 million US dollars on the back of getting included in the Nifty 50 index, while 2 stocks that is getting out, that is Divi's Lab and LTIMindtree, could see an outflow of anywhere between 150 to 190 million US dollars. Now, there are a host of changes when it comes to the Nifty Next 50. 5 stocks that are getting included are BHEL, JSW Energy, Macrotech, NHPC and Union Bank, and the inflows in these stocks could be anywhere between 30 to 50 million US dollars, while 5 stocks that are moving out of the index are Colgate, SRF, Marico, SBI Card and Berger Paints, and these stocks could see an outflow of anywhere between 20 to 57 million US dollars. Now, one change when it comes to the Nifty Bank Index, Canara Bank is coming in while Bandhan Bank is moving out. Canara Bank could see an inflow of close to 44 million US dollars, while Bandhan Bank could see an outflow of close to 37 million US dollars. Now, apart from this, there are some changes when it comes to the CPSE index as well. In that, NTPC's weight is expected to come down, because of which there could be an outflow of close to $132 million US, while three stocks which could see an increase in the weightage are BEL, Coal India and ONGC, and these three stocks could see an additional inflow of close to 29 to 30 million US dollars. So keep an eye out for these stocks in trade. September 27th is the date when flows are expected to come in on the back of the changes in weightage or changes in the index, NSE index.
All right, thanks Amit for that roundup coming in. Time for a quick breather on the show. When we come back, we'll take a look at the big story of the day, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Let's get you some more news and updates, and as promised, let's get you the big story of the day. We've learned from our sources that PB Fintech is exploring a new model to offer additional value for investors, and that it's also planning a foray into the healthcare space. In fact, my colleague Anurag Shah is standing by with more details. Anurag, tell us a little more about this foray into the healthcare space then.
PB Fintech is planning to enter into healthcare service provider business, and as per our sources, company is exploring all options to start a new vertical that would be a hospital care management service vertical. As PB Fintech's another arm, Policy Bazaar, has millions of insurance customers, so to give them value-added services, new vertical company is planning. On this story, a query was sent by ET Now, and PB Fintech has replied that they believe if claims were a quicker and smoother experience, it would increase the number of people buying health insurance. As per another insurance experts, that from next year, Bima Sugam platform will be live, and Bima Sugam platform would be a big competitor to PB Fintech's arm Policy Bazaar. So company is making a new strategy to give value-added services to insurance customer. So the new service will ease the customers' issue related to the admission in hospital or during the discharge process. So that whole process will be smoothened by the new vertical, and company is exploring all options to start this new vertical.
All right, thanks very much, Anurag, for getting us the complete detail on PB Fintech. But then streets seem to be nervous about this entire valuation. In fact, capital allocation policy, that's what we saw, that cut coming in to an extent of more than 7%, but later it recovered. We spoke to Rahul Jain of Daulat Capital, who spoke about the capex plan, valuation of PB Fintech. Let's listen in exactly what did he say.
As we don't know the precise amount of quantum that they would like to deploy here, it would be difficult whether that investment is really meaningful in their context. One thing is clear, that their cash requirement in the current business has reduced meaningfully. The cash burn is almost near zero. I think the valuations were already overstretched, and any such effort only makes it difficult for people to play into it. So we currently have, a view which is negative given the high valuation. So this only adds up to the problem.
All right, then that was a view coming in from Rahul Jain of Daulat Capital when it comes to PB Fintech. Let's also take a look at some other buzzers in trade then, and Maruti Suzuki was the one that was buzzing away in trade. Gains coming in for that one, and it was on a tear after reports suggested that Karnataka may follow Uttar Pradesh's footsteps and exempt strong hybrid cars and EVs from road tax. In fact, we also have Srishti who's standing by with more details. Srishti, tell us a little more about this.
Well, yes, Maruti Suzuki in focus. As per the reports, the Karnataka state is considering to exempt all electric and strong hybrid vehicles under 25 lakhs of rupees from road tax. And this could be a big positive for the company, or from the likes of Maruti Suzuki, as well as from the unlisted space. Toyota could also be a big beneficiary. Why so? Because a while back we have seen such kind of a policy announcements from the UP state government. Feels like that the Karnataka government is also in the mood to follow the suit while providing some tax relief to the strong hybrid models. Along with that, reports also suggest that the Karnataka government is also mulling a new EV policy for the next 5 years, as well as new projects or expansion of the projects can get PLI benefits of 1% of their turnover over the next 5 years. Do note that any such official announcement is not being made yet. All these things may be in the works, and reports are also highlighting that. Along with that, if we talk about the road tax and the registration charges for the hybrid cars, that cost that is applicable on vehicles below 25 lakhs of rupees, that currently stands at 13 to 18% of the overall cost. And when such reliefs are given, then that is good to assume that the sales of these strong hybrids as well as EVs could get a good push considering the state demand. Along with that, we also have a brokerage note coming in from Citi, where they do continue maintaining their buy rating with the target price of 15,500 rupees on Maruti Suzuki. They are also highlighting that reports suggest that more incentives for the manufacturers for the hybrids and electric vehicles could be at play, and Toyota has a plant in Karnataka where it also makes certain hybrid cars for Maruti Suzuki. So on the back of all these news flow, Maruti Suzuki is in focus. And what are the top gainers in Nifty 50 today?
Okay, so the two variants where the maximum of the exemption is going to happen, Maruti is a dominant player in that segments. Thanks very much, Srishti. And we saw a similar kind of move coming in when Uttar Pradesh government waved off, and now it's about Karnataka government talking about on the same lines. We have Gaurav standing by with us to talk about the other stocks which were buzzing in trades today on the back of some news. Gaurav, take it away.
Well, yes. First, let's talk about Zaggle, because this company is going to acquire stake in two entities. First would be in Span Across IT Solution. The company will be acquiring around 98% stake for around 32 crore rupees. And the next will be Mobileware Technologies, where company is investing around 15 crore rupees for 26% stake. As a result, we saw some uptick in this counter. Next, let's talk about IDFC and IDFC First Bank. Both these counters are in focus because NCLT has now approved the merger of these entities. Let's not forget that the process started in July 2023. After that, we have already seen negative returns for both these counters, and post the official news that came out for the merger, IDFC actually saw some uptick, but at the same time IDFC First Bank still is seeing some kind of pressure in the stock price. Up next we have is Vedanta, because board is going to hold its meeting on 8th October to consider fourth interim dividend. Let's not forget that the company has already given around 35 rupees in terms of dividends in FY25 so far, and with this fourth dividend it seems that investors are being a little optimistic on the company. Next, let's talk about Tata Consumers, because one of their product, Tata Salt, will see a price hike. Company is taking a price hike of around 2 rupees per kg of Tata Salt, and as a result we saw some uptick in this counter as well. Up next we have is Trent, because Citi is now being a little bullish on this. They have initiated with buy rating and a target price of 9,250 rupees. What they see is that the PAT can grow at a CAGR of more than 50%, and they have also included this counter in their Pan Asia high conviction stock list. As a result, we saw some uptick in this counter as well. Lastly, let's also focus on NTPC, because NTPC Green Energy, which is IPO candidate, recently inked an JV agreement with Mahapreet for development of around 10 gigawatt of renewable project in Maharashtra. So definitely watching out on all these counters on the back of the news flow that we have received today.
And there you have it. So that was a list of stocks that were buzzing away in trade. Moving on, then the government is considering allowing more PSU NBFCs to issue capital gains bonds under Section 54 EC of the Income Tax Act. Now, sources say that the renewable sector's financing needs could push the MNRE to seek approvals from the Finance Ministry to include green-focused NBFCs. The likes of IREDA, Prakash Priyadarshi is standing by with more details. Prakash?
Yes, we are learning from our sources that the government may include some more NBFCs in the list of companies that can issue capital gain bonds under IT Act. We are given to understand that some more PSU NBFCs are likely to be included in the list of companies that can raise funds through capital gain bonds. A very significant development coming in, as sources are informing that the Ministry of New and Renewable Energy may approach Ministry of Finance to include NBFCs primarily operating in renewable space. A very significant development coming in. In fact, IREDA has requested Ministry to allow issuing capital gain bonds covered under Section 54 EC of the Income Tax Act. NBFCs such as REC and PFC are already issuing capital gain bonds. Therefore, some other companies have also approached Ministry of New and Renewable Energy.
All right, thanks very much, Prakash, for the detail on this matter. Well, with this, there's a wrap on this edition of Your Trade. Thanks so much for watching. Stay tuned to ET Now for more updates from business.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.